Hi everyone, it's Megan. I'm here re-recording the session, and I apologize for the delay, everyone. I just returned late last night, flying in from out of town, and didn't realize that the previous video did not upload last Tuesday as it should have. So anyway, just jumping right in to help you guys with your homework due later tonight. So it's just a quick review of some key dates upcoming, and then I'm going to overview the plan for this next couple of tutoring sessions, especially considering the holidays and the timing of Tuesday nights. Then I'm going to quickly review the statement of cash flows and then provide some hints on your homework that's due tonight at midnight. So just a quick reminder, all you have left to do for this course is your third individual assignment, which is due tonight by midnight via email to both myself and Professor Gu. And then you also have your team presentations in class on Saturday, January 5th. So if you have any questions, again, please do not hesitate to reach out via email to me. I'm back in town and I'm checking all emails now, so I'll do my best to respond and answer any questions you have. All right, so so Tuesday was the recorded session that didn't upload as it should have, but this is the one I'm talking about now. And then Tuesday, December 25th, there will be no session due to the Christmas holiday. Tuesday, January 1st, there's also again no session due to the New Year's Day holiday. But on Wednesday, January 2nd, there will be the last tutoring session that's live. And during that session, it'll start at 6:30 p.m. In NSC 210, sorry, I have to fix that typo. And the plan is to just review and discuss your projects that will be presented that following Saturday, January 5th. So any last minute questions you have, if you want to go show me your PowerPoints, while I can't preliminary grade anything of that nature, I can definitely help guide you in the right direction or give you my opinion on it. I think Professor Gu will have a little bit closer hand in terms of grading this, but I'm here to answer any questions you have about explaining ratios, things of that nature. I'm also planning to come to early on campus that day, so if your group, for whatever reason, if it's easier for you to meet with me and sit down for half an hour, maybe 3 p.m., just email me, let me know. We can coordinate a time and a place. Or even if it's easier for your group to meet up a Thursday afternoon or something like that. I'm officially finished all my classes for the semester, and I'll be in town all the way up and through your last class. So just let me know. I can meet you guys halfway or somewhere closer to your workplaces if you wanted to meet with your group on a lunch break, something like that. Very flexible, so don't hesitate to reach out to me, especially if you find that your team needs a little bit more guidance and help on this project. Okay, so reminders about your assignment number 3. It's due by midnight tonight, so make sure you're working on that. Hopefully you finished that by now, but if not, or you're just finished up last minute touches right now, but email as soon as possible if you find that you do need an extension, something happened in the family, you suddenly became ill, sick. I'm sure you can hear it in my voice, but I came down with strep throat this past couple of days too, so I've been recovering from that. But if you find that you need an extension, you have to email before the assignment is due tonight at midnight. And I had a reminder here that I have limited email access until Sunday, but make sure I'm CC'd on that email too, just so I don't have to reach out again to you tomorrow asking where's your assignment, and you had already previously contacted Professor Gu for an extension, so just so I'm in the loop on all of that stuff. Okay, so again, just a repeat of the extension policy. So these are the late submission penalties. So if it's 1 to 2 days, 5% off, 3 to 4 days, 10% off, 5 to 7, 20% off. And if it's over 7 days until the solution is posted, once the solution is posted, you can't submit your assignment, but then it's 50% off for penalty. So that's pretty steep. So make sure you're getting this done as soon as you can. And then exactly, just to repeat again, no penalty extensions. They all must be granted by Professor Gu. I do not have the authority to grant you an extension policy for really good reasons. You know, a death in the family, one of your children became very sick and had to go to the hospital, things of that nature that are kind of unplanned and uncircumstantial. Definitely extensions can be made, but you must request in advance. Asking for an extension posthumously is not really the best strategy, and you may not be given one, whereas you may have for whatever reason if you had reached out before the assignment deadline. So if you do have a good reason of why you can't submit your assignment by midnight tonight, just reach out, let Professor Gu and myself know, and Professor Gu will make the call on whether or not you can get an extension there. Okay, so the statement of cash flows. So what is the purpose of this financial statement? Essentially, it's to provide a summary of the activity in company's cash account over a period of time. I've joked a lot in the tutoring sessions about how cash is king, and outside external investors, or including banks, from shareholders to banks, they care about how a company is spending their cash because we order things in terms of liquidity. I essentially mean how quickly we convert things to cash, and the mentality that cash is king, cash is accepted universally. I mean, think of your own personal experiences. Say, for example, the credit card machine reader was out. Well, if you had cash to pay for it, you could still buy that good, whereas maybe you wouldn't be able to buy that cup of coffee, or that present if you didn't have an alternative method to pay, for sure. So the reason why investors care as much about cash, more so than anything else, because they know that at the end of the day, if a company goes belly up and all of a sudden they're out of business, well, at least they could pay back that $5 million loan that they have with the $15 million of cash they have sitting in their own bank account. So knowing a company's change in cash from year to year is really important, because it kind of reflects how the company is spending things. If they're spending a lot of money in investing activities, that's always a good sign that they're planning for the future, that they predict the company is going to be in business for a little bit longer, things of that nature. If they're not, it kind of goes hand in hand. So breaking it down a little bit further, if you are struggling of like how your proper statement of cash flow should look, especially doing your homework, I recommend looking at page 49 of the textbook. It has a pretty good example, pretty simple. It's not too much reading around there, and it kind of shows, these are the additions to it, less any subtractions, based on the change of cash hands throughout the year. So I think that page in the textbook is super helpful as you're finishing up this assignment, to kind of get a quick comparison of, okay, did I format this properly? Did I use the right titles? All of that good nature. Just because your statement of cash flows should have in its title, since it's covering a period of time similar to the income statement, it's not the same as an income statement, but there should be on the top of it for the year ended December 31st, 2018, for example, for this year. But it's for a period of time. It would cover like the income statement does. It's not like the balance sheet where it's a snapshot. It's more like a movie per se. So I think the page 49 is a great example for this. And then it kind of shows you all of the subtotals and the netting, net cash from operating activities, net cash used by investing activities, net cash from financing activities, and then shows, okay, the overall increase for the year, and then the cash balance at the beginning of the year, and then the cash balance at the end of the year. So it kind of gives you that behind the scenes look of your cash balance that you would find on your balance sheet. Okay, so the statement of cash flows, once again, make sure you're breaking up into 3 parts: your operating activities, your investing activities, and then finally your financing activities. So all transactions are summarized within each of these activities as either an increase or decrease to cash during that period. So for example, if you're collecting cash from your accounts receivable, then that's going to increase your cash balance throughout the year. And if you're looking along page 49 with me, cash collections from the sale of goods, that would be an increase to your operation, because if you are in the business, your bread and butter of your business is selling, say, backpacks, then if you're receiving cash for those backpacks, then that's going to increase your overall cash balance. Okay. So it breaks it down by category, and it's important for you to separate it too, because then you can kind of look, okay, well, overall, in this example on page 149, we had net cash from operating activities of $1,470, which is pretty good, because you want to make sure that ultimately your business is able to sustain itself on operating cash flows. Because if your business isn't having a net positive operating activity cash flow, then that's usually not a good sign about the financial health of the company. And so the net result of all 3 of these totals, though, would explain the change of the company's overall cash balance. So it's kind of looking further into the why cash may have increased over the years or decreased over the years, because it's possible that cash could have increased over the years, but maybe that's because they're just selling off all of their furniture and all their land. They're not really generating cash from their actual bread and butter business of selling backpacks. They're just generating cash from selling off all their assets. So it's important for investors to kind of look into this, because it gives another perspective of the overall financial health of the company. And that's really important, because if say a bank is looking at and seeing, okay, well, the majority of this company's cash is coming from selling off all of their equipment, and their plants and their lands. They're not really generating a lot of cash from their bread and butter operations of selling backpacks. That's not really a good sign. Maybe kids these days don't want to use backpacks anymore. Maybe they want to use just carry their books. I don't know what a good alternative to backpack is, but that could be a good possibility of why. So this is kind of explaining that why. So once again, to repeat, it's just essentially the statement of cash flows will help answer the why behind some of the numbers, specifically in the cash portion of it all. So it's kind of peeling back the curtain a little bit there. So as you're performing your analysis, not just for this homework, but also for your projects, this is an important statement to look at to really kind of see what's happening in a general sense in the company during the year. Okay, so what are operating activities? They represent cash flows from operating activities. So some examples of this, again, cash collections from sale of goods, cash collections from the sale provision of services, cash collections from interest, cash paid to suppliers, cash paid to employees, cash paid for rent, cash paid for selling activities, cash paid for interest and taxes. So you're really just kind of following the cash flow, you're following the money, and any operations that are essential to, well, any activities that are essential for your day-to-day operations, like interest, that's the cost of borrowing money to secure your business in a substantial way. These would all fall under this category here, for sure. So it's kind of that idea of where you would categorize it all. So investing activities, it's self-explanatory. These come from investing activities. So investing activities, I want you to think of things that you're going to hold on to long-term to improve the betterment of your business. So some examples include cash paid for investment securities. Again, you bought securities is another word for stock. So you probably bought stock in, say, McDonald's, planning to hold on to it for 3 or 4 years, or maybe 10, because you think that over time McDonald's business is going to grow and expand. They're going to make more money. So your company is holding on to it as an investment, similar to how an individual would hold on to investment. Cash paid to purchase property. Again, this is another investment because long-term type of asset, and you're planning to use that property. You're going to invest in it. You're not just going to buy and sell the property, unless it's your bread and butter of your business, but you're planning to buy that property to use it to help generate future cash flows from the business in general. And then cash collections from selling investment securities. So again, if you 3, 4, 10 years later, you turn around and you sell that McDonald's stock that you initially bought for $1 a share, now it's worth $100 a share. That cash collection on the sale of the stock would be considered an investing activity, because that's money that was not the bread and butter of your business of selling backpacks, but would be money that you received cash increase to that account, but you had invested in that security because you figured and hoped that one day it would appreciate over time. And lastly, financing activities. Definitions relatively straightforward, represent cash flows from financing activities. I tend to learn and categorize the activities through examples. So again, some more examples are cash received from short-term borrowing. So when as a company you go to the bank and they give you a $5 million loan to be paid back in 6 months, that $5 million received that's due in, say, March of the following year would be considered cash flow increase from financing activities. Cash paid to reduce long-term debt, that would decrease your overall section. Cash collections from issuing equity, so you, in exchange of giving out shares of stock, pieces of ownership in the company, you're receiving cash. That cash you receive in exchange for those shares that you're giving out would be considered another financing activity. Cash that you pay to repurchase outstanding stock, that would be a decrease into your cash, obviously, but it would be considered a financing activity because it's kind of the opposite of issuing equity, right? You're buying back that equity that you previously gave out. And then lastly, cash paid to shareholders for dividends, that would also be considered a financing activity because it's kind of like a return of capital. While dividends are not required, they are certainly something that investors look for sure. Okay, moving on, just to finish up quickly, I tried to abbreviate this video, not to go into too many examples, just to make it as helpful for your homework as possible. So additional help, I think chapter 14 is your best bet. So it covers the statement of cash flows, and it has some very in-depth examples. The original video I created, I went through a couple of these, but I think this will help you complete your assignment, especially that Part B area. So what page does this chapter start on? It starts on page 611. I think that's super helpful. Okay, so and just other hints in general. So make sure you're completing all of the requirements of this assignment. Read through those directions. Show all of your work. Use tick marks, something like that. If you found that you had to do form calculations, if you're using scratch paper to figure it out, just convert it to some Excel work so I can see that when I, grading your assignment. And then make sure you're using the indirect method for the statement of cash flows. There are two methods, and make sure you're using the indirect one because that's what's asked for in the requirements, going back to number 1. And then number 4, make sure you use complete sentences or, phrases. Don't just write one word type things to answer requirement B. That's kind of the mentality there, because you really want to make sure that you are proving that you understand the why behind in this statement of cash flow analysis. So once again, if you have any questions, feel free to reach out to me via email. Slowly catching up, but I will promise to do my best to answer all of your emails first today as I recover here and everything. But reach out to me, especially questions about your project or anything like that. I'm here to help for sure, and I hope you guys found this video helpful. Have a good evening, happy holidays, Merry Christmas, and Happy New Year, since I won't see most of you before then. But have a good one, guys. Bye-bye.